All right, we are back to another video. Welcome back to Royalty FX Academy, Trading 101, where we focus on teaching you how to understand the ins and out when it comes to trading itself. Just like before, everything that we're going to cover today is available on Amazon, where if you type in Royalty FX Academy, you will get a 7-book series covering the ins and out when it comes to understanding how to trade. Every buy setups the market will give you, every selling setups the market will give you. I have a book covering just that. And of course, stop loss, proper stop loss placement, and D price actions that the market will give you before one buys or sell. Of course, check me out on YouTube, Royalty FX Academy. Right. With that being said, today we are going to cover setup itself, but we're going to do a top-down analysis. So we're pretty much doing a back testing, covering if, meaning if you want to know how to sell properly, do this. If you want to know how to buy properly, do something like that. So again, I'm not just going to say these things. I am going to show you exactly how to place these zones. And I'll be using TradingView to replay to show you how exactly how it would look like. I don't want to just say things. I want to make sure you understand exactly how to study this method, and especially if you want to obtain that freedom, especially when it comes to trading. You don't want to be in the chart all day, 5 o'clock in the morning till 3 o'clock in the morning, and just sitting there, right? You don't want to deal with the FOMO, fear of missing out, and stressing out or crashing out. So this is the reason, this is the purpose for all of this. Okay, so let's go ahead and run through this real quick. So just like every time we go over any trading, any setup, anything in general that got to do with Forex, with the Forex market, um, I want to make sure we go over all rules. Why? Because all rules is the technical analysis. It is our market psychology. Okay. Um, Rule number one, get straight to the point, right? Rule number one is basically technical analysis. What time frame are we using to identify our setup, meaning the buy setup, the sell setup? We want to use and will always use our highest possible time frame, such as the monthly, and then weekly, and last the daily. These are the time frame that you will use to identify your sell setups, the double tops, and the buy setups, double bottoms. Also, of course, the break and retest for the sell, also known as a trend reversal, and break and retest for the buy, vice versa. Trend reversal coming from a sell to a buy, and coming from a buy to a sell. So that's where all your setups are coming from. All right. So that's the time frame you trade. Rule number two also goes with the trading log, right? Rule number two is the time frame that you are going to use to actually pull the trigger, meaning click buy, click sell, right? The lowest time frame we use will be the 4 hour, right? The 4 hour, right? That's the lowest time frame we use. Okay, sometimes I say the H4, right? So it's the 4 hour time frame. It's the 4 hour time frame we're gonna use. That's the lowest time frame we are going to use. Let's put that in there, okay? So 4 hour time frame. All right, that is the lowest time frame you will be using. All right. So using the 4 hour time frame goes hand in hand with your rule number three, which means the price action, right? The candle combination that tell us, hey, buyers have now taken over, sellers have now taken over. It is now time to pull the trigger. And that rule number three is PA, right? So PA would be short for price action, right? And the price action that we trade, right? The price action that we trade is the engulfing bar. Okay, let me throw that in there also. Price action, okay? And again, we trade the engulfing bar, either bullish or bearish. All right. And rule number 4 would be our SL, which is our stop loss. Okay. SL, which is stop loss after either one pulling the trigger for a buy or a sell. So stop loss, it literally mean what it says, stop losing. And of course, every single stop loss will have to be placed accordingly, either from a buy or from a sell, either the last low, okay, or last high. So to be more specific, right? If you buy the market, your stop loss will go at the last high, previous high. And I'm sorry, if you sell the market, it goes at the previous high. And if you buy the market, it goes at the previous low. My bad. Um, and of course, the last rule is rule number 5. That will be your take profit. All right. We're just looking at structural point, but really these are your fundamentals. These are your foundation when it comes to your trading and also your trading psychology. All right. So just so we can reinforce that a little bit, right? Let me see. We could do we could run a blank one real quick, right? Just so you can understand exactly how this works, right? So again, I do have that book also, Discipline Paradox, available on Amazon. If you are interested in learning how to have a better understanding of trading, that way you can have a better market psychology. But we could go over that real quick, right? So market psychology itself. So you don't want to have the fear of FOMO, meaning fear of missing out or getting in too early or entering the market way too late, putting your stop loss way too too tight, right? Understanding that you need to place a stop loss exactly where it needs to be. So when you want to have a proper psychology, I truly believe that every trader out there already have a system that will allow them to have a great trading psychology, just not implementing that, right? This is what I mean by that, right? So we already know our rule number 1, right, is the time frame that we use for trading, which is the monthly, weekly, and daily. So these are the time frame your technical analysis is coming from. So when it comes to your trading log, right? When it comes to your trading log, right? So you want to know first thing first, right? Setup, right? So your setup, right? What kind of setup is it? Is it a buy setup or a sell setup? And time frame for that setup. So let's just say we have a DT, which is a double top. So it will look something like this, right? Where you have 2 pillars, you're looking for it to sell, right? So say you have a double top, right? Boom, boom. So you're looking for that sell. That's what you're looking for, right? The setup will be a double top. So we could just put DT, right? And then time frame, right? The time frame, as far as what time frame did you identify this setup, either the monthly, the weekly, or the daily. So that'll be the time frame for the setup. So let's just use the weekly. All right. So we know we have a double top possible setup based off the weekly time frame, right? So rule number 1 is check following your trading log. Once zones is placed, now we go to rule number 2, right? Rule number 2 is the time frame that you use to execute that, right? So that will be the 4-hour time frame, right? 4-hour time frame. So for execution time frame entry, right? Or entry time frame entry, right? 4-hour. Boom. Okay. So again, trading law go hand to hand with your rules, right? The next thing we looking for, which is rule number 3, right? Number 3 is the confirmation, meaning the price action that the market is going to give us that indicate it is now time to take the trade. Remember, price action. Price is currently at a level where it's time to take action. And that will look with a combination of a bearish engulfing. Either one, where you get a single bar engulfing. What do I mean by that? Where you get one candle that engulfed the previous candle, like so, right? Then your entry will be within here, right? Or you could get a two or three candle engulfing. So let's just do a two candle engulfing. So if that's what you understand exactly what I mean by that. What I mean by a two candle engulfing, I mean that it took two, okay, selling candles, right? It took two of them, right? See that? It took two selling candles to engulf, right? To engulf the previous buying candle, right? Here is where you would enter. These right here would be your price action. So these are two variation of price action. Again, I do have the ultimate price action available now on Amazon. If you want to truly understand what price action the market will always give you, no matter what the pair you trade before either one buys or sell, right? So PA for price action. So we're gonna say, so we're gonna put PA here, okay, right? So we're gonna put PA because we got to fill that in, right? PA stands for price action again. So what you would put there is what kind of price action, and give me like giving yourself a small descriptive of what that price action looks like or characteristic of it, right? So you will put in the case of this, we got a double top. It would be a bearish, right? You'll get a bearish, okay? Bearish engulfing bar, right? Engulfing, right? A bearish engulfing, right? And whichever one it will be, you will categorize it as either a, let's do a um, two to three. Let's do a two candle bearish engulfing. Two candle, right? It's two candles engulfing. Okay, so it's two candle engulfing, right? You see how your rules goes hand in hand, right? With your trading log. Again, market psychology is just the mindset that you have when you in the market, when you are trading. That way you can be disciplined and consistent with yourself. That way you're not afraid or not intimidated or feeling nervous or doubts. So you're just following your rules. Just like rule number one, time frame. Rule number two, the time frame you're using for execution. Three, price action for execution, meaning the candle combination that it gives you that says, hey, it is now time to execute. Then we go to rule number four, right? Rule number four would be your SL, right? So we're talking about stop loss, right? So you could just put something like this, right? That's what I have, stop loss. So due to the fact that we are taking a sell setup, right? My stop loss will be at the last, okay? Last high. Okay, so I know I'm saying it. Let me give you an idea of how that would look like, right? So we're gonna do a little bit of work with this real quick. I'm gonna clean this a little bit and clean that right there. So what I'm gonna do is I'm gonna draw out the last buying candle, right? So you see that? So basically these were bullish candles. I know it's red. I'll put some colors in there to fill it in. These are bullish candles, right? And this, let me throw a wick in there real quick. Okay, that'll be the wick of the last candle, right? Let's fill in the body. So these are bullish candles. Market was going up, right? Make sure you guys can see this also, right? So that's where it stopped at. All right. So let's go ahead and fix this real quick. So, all right, that's where it stopped at within this point right here, right? And then we're gonna go ahead and give it a bearish engulfing. So what we're gonna do is we're gonna use the first price action where we have a single bar, right? Where it took one selling candle to engulf the previous candle, right? To engulf the previous selling candle like so. So just so you understand that it got engulfed, you'll see right here, it closed below it, right? So it took over, right? It engulfed it. That would be your entry point. and then market fell, right? So we have a zone point across, right? We got a zone point across. Now, right here, we end up getting this one, this variation of a price action. So let's go ahead and draw this in. All right, because I want you guys to actually understand that. So we would have this again as the last. Sorry, let's make it a bit more thicker so you guys can really see it, right? This will be the last bullish candle, of course. Okay. All right. Let's give it a bit more life. These are selling candles, okay? How will you guys actually understand, right? No. Now, what happened is market give us this type of price action. Okay. Ooh, I didn't need to do that like that. It was kind of like be more specific with the cleaning. Okay, perfect. Right. The market gave us a bearish engulfing where it took two selling candles, okay, to engulf, right, to overtake the last buying candle, right? Let me show you at the point, right, which is here. It closed below it. So again, these are bullish candles. Okay. It took two bearish candles to engulf the last buying candle. Right down here would be your entry point. Okay. Now, due to the fact that we have a double top, and let's go ahead and create some wicks for that, right? Put something like so. Boom, 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 right? So for us to place a proper stop loss, we got to look at the previous high. Since we don't have anything back there, we have to look at which high is higher. Now, this is the last high point between the wick high and where the market closed at. We're going to look at that. So when we enter, right, when we enter here, that's our entry. We enter here, our SL or stop loss will go on top of the previous high, right? That'll be up there. Does that make sense? That's what I mean by that. Now, let's just do a trend continuation, just so you can have a much better understanding of the last high, right? A trend continuation, a bearish trend to be exact, where we get lower lows and low highs, right? Market went to retest previous structure point. Here, within this area, we look for PA or price action, okay? When and if, okay? When and if, that's what we do. We simply read and react. When and if market give us our bearish engulfing price action, we would enter, right? We would enter here for the sell, for the market to fall, and we'll look at the previous high. The previous high would be this right here, because this right here is the previous low high. So, because remember, structure wise, right? In a downtrend, market gives you lower lows where each low is lower than the previous low, right? And highs, but the low highs, meaning they're getting lower, right? Where each high is lower than the previous one. So when I say the previous high, I'm talking about something like this. So either if you're taking a break, which would be right here, and retest, that's the retest point, right? It broke here, and this will be the retest. You take your price action, and then to target the next structure point, right? So for rule number 5, right? Rule number 5, the reason why it's last is just the next target point. It doesn't mean it's not as important. You're just targeting the next structure, okay? Which varies sometimes. So, and then for 5, we'll just, for a trading law, it will be considered as TP, right? Take profit, right? So since we taking a sell off the double top, we'll target the structure low, previous low point. So TP, let's change the color variation. And also let's make the zone look more attractive. Boom, that's the zone, right? So this would be our target TP, right? So TP, take profit, right? It will be previous low or last low, right? Or last structure point, or previous lower low, however way you want to word it. But just as long as you understand, it's the next structure low. All right. So rule 5 will be TP, right? And also next structure low, right? So you see, your rules goes hand in hand with your trading log, which is your trading psychology. That there's a method to the madness. All right. How you backtest, you got to log what you backtesting, meaning what are you studying? If you're studying how the market bought, if you're studying how the market sold, make sure you write down the setup itself, what it is that you saw, right? Say, I saw a double top. Okay. I marked my zone, right? This is the price action the market give me. And then this is where I would have entered. And this is where I would place my stop loss, right? And then this is how it played out. And then you will continue looking for the setups, right? Studying these, and then you will learn to understand, okay, cool, this is what works. And then when you go forward trading, or even demos, of course, that's what we're going to be doing, right? We're going to do a little back testing with the demo because we're going to do some replay. When you demo and replay, you run back the setup, you'll see how you would actually pull the trigger within current market time. All right. So rules, okay? Trading logs, all right? These are your rules, all right? These are your rules. Hopefully this stands out, okay? Rules and trading log, it goes hand in hand. That's how you study, which is how you're going to actually execute. That's exactly how you're going to take your trades for the buy or for the sell. And that's how you document them. So when it comes to trading psychology, you guys already have a system. You just got to document that system, right? You got to log them in. So when you do take your trade, you got to fill in the blank. Was it my higher time frame setup? Boom, check. What kind of setup was it? Double bottom, break and retest. Check, right? Um, my time for execution, 4 hour time frame. Check. Price action, D engulfing bar. All right. Which one? How did it look like? Boom. Of course, if you put the entry point, if you want to put the exact coordination as far as the number 1.600, whatever it may be, but entry point at the close of candle, stop loss, previous high or previous low. All right. And of course, last one would be really just more of your lot size based on how much you was willing to lose. All right. If you was taking a $4 trade, your overall drawdown is, look, my 1% is 250. No matter what happened, I'm risking 250. It doesn't matter if it is 100 pips away or if it is 50 pips. All I have to do is drop my lot size, either one from a $4 to a $2 or $1 lot size. That way my stop loss equals that 250. Staying consistent with that stop loss is how you're going to grow. Okay. So that's pretty much what trading psychology is. Most traders out there that don't have a great trading psychology is because they don't have a great trading system, because they haven't mastered what they know. Okay. Now, when it comes to how we trade and we use the I teach that, of course, why we use the 4 hour